Hi, welcome to this week's weekly market update with Morton Brown Family Wealth. I am Katie Brown and I have Cody Demmel here with me today.
Hey, how are you?
Great, great. So this week we have a couple of things that we want to talk about. We want to circle back on earnings and see how that is continuing to go for companies here in the US. And then we want to touch on inflation and all of this extra money that's been pumped into our system. What does that mean for potential inflation down the road? And then finally, we want to take a look at the healthcare system and what this COVID environment, how that's impacted telehealth and how that's impacted our need for different physicians. So let's start once again with earnings season. This is, as we continue to move through here, it's been really interesting. We recently came across an article in Reuters that talked about the actual earnings versus expectations. Cody, do you want to touch on that a little bit for us?
So we spoke briefly about it last week, how last week was the biggest earnings week of the year, and especially how important it was with everything that we've gone through and what their outlooks were going to be moving forward. Out of the 300 companies that have reported so far, 82% of them have surpassed earnings expectations. Obviously, they were a little lower with everything going on, but that's the highest it's ever been since they started keeping track of that back to 1994. So that was great to see.
Gosh. And you know, you touched on it right there, that the expectations were lower. And I think that's been so much of the challenge. How do you price all this into the environment? How do you even set those expectations and how close can you get? And so I think there was the concern that the second quarter was going to be really, really tough for a lot of companies. And it was. However, expectations might have been squashed down a little more than necessary. And I think something else that was interesting in there, you mentioned 81% of the companies surpassed, but it's also by the amount that they surpassed.
Yeah.
So on average, it was 21% of greater earnings than expected. And we've seen that play out in the markets as well as we continue to rise here.
Yep. That was also the largest size of outbeat since 1994 too. So another great thing to see. But like I said, and like we spoke about last week, the earnings expectations were down around 33% on average compared to what they were in quarter two of 2019, just from everything that obviously we've been going through.
Yeah, it continues to be a record-breaking year in so many different areas. So inflation, you know, that's something else that we've been talking a lot about. We have had just a lot of money pumped into the system, whether it's from the stimulus checks, from the small business loans, from the Fed going in and buying bonds, and just really adding more to the piles of money that's out there. And so along with that comes the concern of, okay, what does that mean for inflation on the other side? And so we're trying to build some context around that conversation. What are you seeing and hearing in that regard?
The U.S. money supply has grown 20% from 2019 to 2020, which is the largest it's ever been since, again, they started keeping track in 1981. So obviously there are some concerns that there's going to be higher inflation going forward. And I think that's part of the reasons why we've seen such a jump in the gold price.
So you mentioned a 20% increase. And I just want to keep that, just remind everybody that that's from year end 2019 through July. So not even a full year. And it still has far surpassed any other increase that was before. And you mentioned 1994. And I think at that time it was a 15% increase. And we still have coming up down the pipeline yet this year, another potential round of stimulus checks and potential increases to unemployment benefits. I know that we're hearing a lot of back and forth right now as far as, because that $600 per week increase in unemployment benefits just expired, and there's discussion about what does that next increase look like. Will we land at $200, $400, another $600? They're hashing out all of those details right now.
Yeah.
But I think that the thing that's really important in the CNBC article is that it reminds us that money itself does not create that inflation. It's the spending and the lending on the other side. So if companies are still in that protective mode of, holding on to it, paying down debt, using it for other reasons, and not necessarily spending it or lending it, then we may not get that huge inflation spike on the other side.
Yeah.
So something definitely to watch and be conscious of, but once again, not to overreact just yet. And then the third thing that we wanted to touch on is COVID and this coronavirus. MarketWatch had linked to an article in nextgeneration.org that talked about this environment and what it means for healthcare going forward. Specifically, it focused on telehealth, and it really focused on the baby boomer population and the older populations with Medicare. And I thought that was really interesting. If you want to touch on that a little bit.
I thought there was a couple really interesting stats. So the first stat that I thought was interesting, this is for all individuals in the United States. Only 11% of Americans used telehealth in 2019. Now that's all the way up to 46% of Americans have used it in the recent months. And then the other stat that was focused more on the baby boomers was only 13,000 people on average in a week used telemedicine before the pandemic, and now it's up to 1.7 million people use it on average.
And that's specific to Medicare, right?
Yeah.
So people under Medicare, and a lot of that had to do with Medicare changing their rules around who can use the telehealth.
Exactly. Yeah, who can use it, and also what services you can use it for.
Yes. Yeah.
Yeah.
Really reserved for people in kind of rural settings that maybe couldn't get into the doctor's office as easily. Dennis often mentions kind of those second and third order effects. And I think that's going to be something fascinating to watch. How care is delivered, how communication happens, and then the response from the different insurance companies and providers. So Medicare, for instance, right now, my understanding of it is that their reimbursement for a telehealth appointment versus an in-office appointment is basically the same, but that's probably going to change because there is a different cost structure to each. Mm-hmm. And so how does insurance play a role? I think all of that is going to be a moving target for a really long time.
Yeah.
And then they also talked about the number of geriatric doctors and recognizing that the number is probably way lower than it should be. And with this pandemic hitting the older population at a much greater degree, it's really evident that we need more physicians caring for individuals that are age 60 and older, or roughly in that demographic. And I think that the statistic was that right now there are 7,000 geriatricians out there, but by 2025, trying to remember how many they said they needed, like 25,000.
Like 23,000,
estimated. Yeah, so hopefully this will bring some light to that as young people are coming up, up and coming physicians are making their specialty decisions. Hopefully there'll be a greater population kind of entering into that realm, because it sounds like there's definitely a need there.
Mm-hmm. Yeah.
Well, outside of that, we have survived the hurricane and the spin-off tornadoes from yesterday. Once again, this is the week of August 3rd, and I hope that all of you listening are doing well. I hope all the water is out of your basements and that there's no real damage. So thinking about you, and we look forward to connecting again soon. If you have any questions for us at Morton Brown, we always welcome it, and we'd love to hear from you. Until next week, thank you so much for tuning in. Take care.